In this video, I want to talk about Microsoft, and this past week they announced their earnings. It was better than expected, as earnings and revenue for the quarter beat Wall Street estimates. However, the stock fell off as investors focused on disappointing Azure revenue, but management called the accelerating in the quarter ahead's total revenue increased 15% from a year earlier. Nevertheless, we saw this week's weekly candle close below this trend line, which has its origins at the January 2023 lows. So this is a big deal because we've had several touches in which price held and this trend line served as support. Back in October of last year, we held once. Also, we have to make note that we were in a weekly buy level based on this base rally, pullback. And we've seen another touch back in April of this past year in the form of tweezers before price took out what was at the time all-time highs. Like I said, now we had this close, and so this close represents potential for price to move lower. And we cannot ignore that we had a weak job report on Friday that spooked the markets. Equity markets lost roughly $2.7 trillion. And so this is the level that I'm looking at. This monthly buy level at $370. Scrolling to the monthly chart, let's see how that looks. We have a rally, one basing candle, and then a rally out. And again, $40 is nothing when it comes to tech stocks. Now, to actually get into the news on the earnings front, again, shares dipped on Wednesday as investors looked past better than expected earnings and revenue and focused instead on disappointing cloud results. But executives provided a dose of optimism when they predicted a cloud growth speed up in the first half of next year. Again, Microsoft's revenue increased 15% year over year in the fiscal fourth quarter. Net income at $22 billion was up from $20 billion from a year ago. Now, this is the all-important cloud segment. Revenue from Azure and other cloud services grew 29% during the quarter. Analysts polled by CNBC and Street Account had expected 31% growth. Microsoft's Azure numbers had not fallen short of consensus since 2022. Microsoft's cloud unit is of particular importance to Wall Street as the company is battling with Amazon's AWS and Google for artificial intelligence workloads. All three companies are investing heavily to boost AI capabilities and to try and lure startups and big companies as Gen AI models rapidly advance. Here's what the CEO had to say on the earnings call. Their share gains accelerated this year, driven by AI, but demand for Azure AI services remained higher than available capacity. They're saying they can't even meet the demand. And with that, use any dips as buying opportunities. Look for buyers to come in at this $370 level if price continues to decline in the subsequent weeks. Thanks for watching. Subscribe. Please like the video.